Affle India, one of those new age technology stocks which enjoyed mass consumer confidence and enjoyed trading at premium valuations as well. The stock has given more than 500% in terms of returns to its investors since its IPO launch in 2019. But here's the first ever downgrade coming in on Affle India from the brokerage firm Nomura, where Nomura cuts its rating from buy rating earlier and giving it a neutral rating now, but have raised the target price from 1785 earlier to a target price of 5,000 now. But to note that the target price that Nomura has given is still below the current market price of the company. So first, let's find out what is the rationale behind this downgrade. Firstly, Nomura feels that the company has risk due to the potential of the changes in the privacy policy, wherein we see that the companies of the like Apple and Google are making changes in their operating system, that is the iOS and Android, and also on their browser platform to improve user privacy, which could make data collection and targeting users difficult for Affle India. It is not impacting the company as of now, but going forward it could be a major reason for concern for Affle India. Another factor for the downgrade is that in the books of the company has been capitalizing its expenses, which could be elevated, which they see elevated as a percentage of PAT, which Nomura estimates that for financial year 22, they estimate it to be around 35 to 40% of their PAT in their estimates, which is another concern for this downgrade. The company has been doing expansions into multiple emerging markets with leadership in none except India, which could restrain its limited resources. That's what Nomura feels. And these factors, together with the expensive valuations of the company, as in where financial year 22 EPS we see at around above 100 multiple 100x, which is another reason for this downgrade. And Nomura also expects mid-single digit decline in the EPS in financial year 22 due to the increase in the tax rate and margin dilution, and all of these factors are driving in for the downgrade. However, Nomura continues to like Affle for the following reasons. Firstly, they know that the opportunity from the underpenetrated digital advertising market in India and the emerging markets, where Affle is increasing penetration. So this is one positive for the company which they like. The fact that it has carved a niche of its own through a focus on the CPCU model that they are working in, which is the cost per converted user, which is working well for the company. Its emphasis on the completeness of the portfolio through organic investments and M&A. And they also highlight that recently Affle announced its acquisition of Jam, the company which owns mobile advertising platform, for a cash consideration of 3,000 crores. They like this acquisition in terms of the market expansion opportunity it offers for Affle India, and the finds that the acquisition has been done at a reasonable valuation. So these acquisitions that Affle is being doing could be a positive trigger for the company. So in the latest brokerage report, they not only highlight the negative factors but also the positive ones as well. This is what Nomura has come up with their reports, but in terms of the returns, the stock no more offers an upside for them, and they see the target price of the company at 5,000 rupees per share.